Hey y'all, today I want to talk about 10 advantages and tax benefits to investing in real estate and why I think that it's the best avenue to invest in and the best way to build wealth for the long term. The first thing I want to talk about, and the first two items are not tax related, they're just advantages that you have when you invest in real estate. The first item is leveraging. So when you buy most other investments, you can't necessarily get a loan for a large percentage of what you're starting, whether it be a business or any other investment stocks. You can't necessarily get a large percentage of it paid up front. In real estate, you can generally leverage about 65 to somewhere around 95% of your investment and only put down the rest in cash, which means that if you bought a $1 million property and you got a 75% loan on it, you're going to be putting up only $250,000 on a $1 million investment. And that is a huge benefit that you can't easily get in other investments. The second item is appreciation. Unlike most other items that you can invest in, stocks do appreciate, but they can also depreciate. Real estate, as long as you're in a decent market, a market that has growth, which is you can easily find online what markets, what cities or states have growth, you're going to have a appreciation over time of that property. It's going to go up in value. The third item that I want to talk about, and this is the first of the tax advantages, is passive income. So real estate is considered passive income. If you were to start a business and you had income from your business, your net income, you'd be paying self-employment tax, which is 15.3% on that income. With real estate, you don't have to pay that. You have to pay regular income tax rates for anything, any rents or any other income besides for gains. And then another advantage, which I'm going to talk about in a minute, is when you sell the property, you have capital gain rates. The next item is depreciation. Depreciation is a huge advantage in real estate, tax-wise. Depreciation allows you to take a deduction against income for a portion of the property that you purchased every single year. And depending on what type of property it is, you'll get different depreciation rates. So for example, for a residential property, it depreciates over 27.5 years. In a commercial property, it's 39 years. There are other benefits actually on real estate that you can take advantage of, like cost segregation. So if you were to break down certain components of a property, you get additional depreciation quicker. For example, appliances will be over 5 years. And that allows you to have a lot more depreciation upfront in your investment, especially if you're only planning on holding onto it for 5-10 years. And another thing about depreciation is it's not a cash flow item. In other words, you get a deduction, but you didn't pay any money out for that to get the deduction. Pretty much any other deduction in any other industry or business requires you to outlay cash. It requires you to have an expense, an actual physical expense. But depreciation is an expense where you don't have to spend any money to get that deduction. Number 5 on the list, and this is a huge one, massive for any real estate investor, and most people have heard of this, but not a lot of people understand exactly how it works, is the 1031 exchange. And a 1031 exchange is basically when you sell a property and you buy another property shortly after that, you are able to defer the gains on the first property. And I'll explain this along with a lot of these other items in future videos. But basically, if you had a $100,000 gain upon selling a property and you immediately put it into another property and you do a proper 1031 exchange, you would not have to pay a gain on that property until you sell the final property and you take the gain and you don't buy another property, which allows you to defer the gain for quite a long time. The next item is sale of principal residence. So a sale of a principal residence is when you live in a house and it's your residence, you live there for at least 2 of the last 5 years, you get to deduct, if you're single, $250,000 of gain upon sale of that property. And if you're married, you get up to $500,000 of a gain that you don't have to pay taxes on upon sale of that property. And I actually know people who use this as their sole source of income. They buy houses that need work and they think that they're going to appreciate in value. They live in it for a few years, they make the house really nice, and then they sell it and they do not have to pay any money on the gain. It's tax-free. The next item is what I talked about a little bit before, capital gains rates. So when you do sell a property and you don't do a 1031 exchange and you've held on to it for longer than a year, you are subject to capital gains rates, which is a lot lower than income tax rates. So if you're in the 30 or 35 or something, north of anything north of 20 really percent income tax bracket, then and you sell a property that you've held for longer than a year, the gain on it will be taxed at 15%, which is huge. It's definitely a massive tax benefit of owning real estate. The next item is number 8, and that's qualified opportunity zones. So the government decides that there are certain areas, zones that they want people to invest in. And the way they get people to invest in it is they offer lots of tax advantages to invest and buy properties in those zones. For example, upon sale, if you've held it for more than 10 years, you can possibly not have any gain upon sale of that property. If you buy a qualified opportunity zone property with capital gains monies that you sold an asset for and you want to defer the gain, so you buy a qualified opportunity zone property and you get to defer the gain up to 7 years with an additional 10%, potential 10% reduction in your gain. And I'll talk more on that later in another video. Number 9 is self-directed IRAs. So everybody knows what an IRA is. You work for a company or you work for yourself and you want to not pay taxes in the current year, so you contribute to an IRA or 401k, and that you get a deduction on your current year tax return, and that goes towards retirement, and when you retire you pay the taxes on it then. For a self-directed IRA, you can basically invest in real estate monies that you have in your IRA, and as long as you follow the rules, you can buy properties with it, and then any income you have will be deferred until you retire. Number 10 is a DST trust, and this is basically a strategy for people who are nearing the end of their career, who want to retire, who don't want to hassle with real estate, but they want to invest in real estate. And the way this works is, say you have a property and the basis of it is very low. So if you sold it right now, you'd have a large gain, but you want to sell it because you want to retire and you don't want to be dealing with property anymore. So what a DST trust does is you do a 1031 exchange into this trust, and you don't have to pay the taxes on the gain. And what the DST trust does is they give you a percentage of all the property in that trust that they own, and you get to own that, and your basis in that is the basis of what you had in original property. So you're basically doing a 1031 exchange and into an entity where you don't have to manage the property anymore. You get whatever gains, income that those properties generate, and you don't have to pay taxes on the gain until you sell out of a DST trust. And it's a lot more complicated than that, and I'll go into that in a separate video. However, it's one of the best benefits of investing in real estate, especially if you're nearing an age where you don't want to be hassling with real estate anymore. Thank you very much for watching this video. I'm going to be posting a detailed video on each of these topics in the coming weeks, and I'd recommend that if you're interested in investing in real estate and you want to know more about the tax advantages and why you should invest and why so many people are into investing in real estate, you continue to watch this series and I'll teach you all about it. Thank you very much for watching. If you liked, please like this video, comment down below on any questions you have, and subscribe to my channel if you enjoy my videos. Thank you very much.